Kevin O'Leary loves to say your $5 latte is the reason you're not a millionaire. And for years, people nodded, felt guilty, skipped coffee for a week, and stayed broke anyway. Here's the uncomfortable truth no one wants to admit. In 2026, that advice is no longer just outdated, it's actually dangerous. Because if you think cutting coffee is the path to wealth, you're already playing the wrong game. Let's do the math. They never show you. You save $5 a day, that's about $1,800 a year. Even if you invest that perfectly, you're still decades away from anything meaningful. Meanwhile, inflation is eating your savings alive. AI is replacing jobs faster than ever, and entire industries are being rebuilt in real time. So no, the latte is not the problem. The problem is that you were trained to think like a saver in a world that now rewards deployers. In 2026, money doesn't grow because you protect it. It grows because you aim it. If you're still broke, it's not because you spend too much. It's because you don't know where money actually multiplies anymore. You don't understand leverage. You don't understand asymmetric bets. You don't understand how people are turning small, ugly, unsexy amounts of capital into machines that print cash. And nobody taught you because teaching that would break the system. Here's what rich people don't waste time on: tracking lattes, clipping coupons, or arguing about small expenses. They obsess over one thing only: where does the first $100 go so it comes back with friends? Because the first 100 isn't about profit. It's about positioning. It's about buying access, skills, attention, data, distribution, things that compound far faster than interest ever will. While you're trying to save your way to safety, other people are risking their way to control. And let me be brutally honest, if your plan is work harder, spend less, hope it works out, you are mathematically cooked. In this video, I'm not going to tell you to stop buying coffee. I'm going to show you how people are flipping their first $100 into leverage, into momentum, into income streams that don't care about inflation or bosses or permission. Not theory, not motivation, strategy. Because in 2026, the real divide isn't rich versus poor. It's people who know where to deploy money and people who are still counting pennies, wondering why nothing changes. Kevin O'Leary isn't lying to you, but he's not talking to you either. That's the part nobody explains. When a multimillionaire tells you don't spend, he's speaking from a completely different altitude. His advice comes from someone who already owns assets, already controls cash flow, already has leverage working for him while he sleeps. When he saves money, it's strategic restraint. When you do it, it often becomes financial paralysis. Here's why that advice is dangerous in 2026. Don't spend sounds smart, responsible, and mature. But psychologically, it wires your brain for scarcity. It trains you to fear money leaving your hands instead of learning how to make money come back bigger. You start treating cash like something to protect, not something to deploy. And that mindset quietly keeps you poor. Being cheap is not an investment strategy. The rich don't win because they save better than you. They win because they understand multiplication. They know money is a tool, not a trophy. They don't ask, how do I hold on to this? They ask, how do I turn this into 10 times more? Now let's talk reality. If you take your $100 and put it in a jar or a basic savings account, inflation doesn't care about your discipline. By December 2026, that $100 buys less food, less time, less freedom than it does today. You didn't lose money emotionally, but you lost it economically. That's the trap. Celebrity advice convinces you that not losing is the same as winning. It isn't. Not losing just means standing still while the world moves past you. Kevin O'Leary can afford to say cut expenses because his real wealth isn't created by daily spending habits. It's created by ownership, equity, businesses, royalties, deal flow. His money multiplies in places you never see on Instagram clips. But when someone at the bottom copies advice meant for the top, it backfires. You don't need tighter budgeting, you need better deployment. The real risk in 2026 isn't spending $5 on coffee. The real risk is never learning where to place your first $100, so it comes back as $200, then $500, then momentum. Saving is defensive, building is offensive. And in an economy driven by AI, automation, and leverage, defense alone guarantees one thing: you fall behind quietly. So the mistake isn't listening to successful people. The mistake is copying their surface habits instead of their actual strategy. They don't worship frugality, they worship return. And until you make that mental shift from don't spend to how does this multiply, no amount of discipline will change your outcome. You're still poor for one simple reason that hurts to hear: you use money to look good today instead of buying power for tomorrow. This isn't about intelligence. It's not about luck. It's not even about income. It's about what your brain does the moment money touches your hands. When most people get $100, their first instinct is consumption. Something tangible, something emotional, something that gives instant relief. New shoes, a jacket, a dinner, a gadget. It feels like progress because it feels good. But 2 years later, that same $100 purchase is worth almost nothing. The shoes are worn. The excitement is gone. The money is dead. That's the poor mindset. Not because the person is stupid, but because the money is used to escape discomfort instead of creating leverage. Now compare that to how rich-minded people think. When they get $100, they don't ask, what can I buy? They ask, what can this turn into? They're not impressed by the object. They're interested in the outcome. They'll put that $100 into a skill, a tool, a platform, data, attention, distribution, or an asset that has one job only: come back bigger. Even if it takes time, even if it's boring, even if nobody sees it. That's the real divide. Poor thinking wants visible proof immediately. Rich thinking accepts invisible progress if the return makes sense. And here's where most people destroy their future without realizing it. They keep waiting. Waiting for more money, waiting for stability, waiting for the right time. They tell themselves, once I have enough, then I'll invest. But that day never comes because the skill of multiplication isn't unlocked by having more money. It's unlocked by learning how to deploy small amounts correctly. $100 is not too little. $100 is the test. If you can't turn $100 into $150, $300, or knowledge that pays you back for years, $10,000 won't save you. You'll just lose it slower. This is the mistake nobody warns you about. The poor mindset says, I'll start when I have enough. The rich mindset says, I'll start so I can get enough. One waits for confidence. The other builds confidence through action. And let's be clear, this isn't about gambling or reckless risk. It's about intentional deployment. It's about putting money where it can grow, even if that growth is skills, leverage, or positioning instead of immediate cash. Because money doesn't change people. It reveals how they think. If $100 disappears when it touches your hands today, $1,000 will disappear tomorrow. And $10,000 will disappear after that. The amount doesn't fix the mindset. The mindset fixes the amount. So ask yourself this honestly. Does your money die when you spend it, or does it come back with friends? That question alone explains why some people stay stuck forever and others escape with the same starting point. The biggest mistake you're making right now isn't lack of money. It's waiting for permission you don't need. You don't need more capital. You need to stop consuming like you're broke and start deploying like you're serious, because the gap between poor and rich doesn't start at millions. It starts at the first $100 and what you choose to do with it. If you only have $100, this is where most people freeze. They overthink. They wait. They convince themselves it's too small to matter. And that hesitation alone is why they stay stuck. Because $100 isn't about getting rich. It's about learning how money behaves when you deploy it correctly. So here's the 2026 blueprint, not hype, not gambling, not fantasy. A real structure that teaches you 3 things at once: protection, exposure to the future, and skill acquisition. This is how you turn $100 into a system, not a lottery ticket. Let's start with the foundation. The first $40 goes into index funds or ETFs, something like VUO or VTI. This is not the exciting part, and that's the point. This is your safe base. This is where you learn discipline, patience, and how markets actually move over time, instead of how social media pretends they move. Index funds work because they remove ego from the equation. You're not trying to be smarter than the market. You're accepting a simple truth. Over long periods, productive companies grow, economies expand, and ownership wins. VO tracks the S&P 500. The 500 most powerful companies in the US VTI goes even broader, capturing the entire US stock market. This $40 teaches you something critical. Money doesn't need constant action to grow. It needs time and consistency. You're not checking it every day. You're not panicking on red days. You're training your nervous system to tolerate volatility without emotional decisions. In 2026, this matters more than ever. Markets move fast. News cycles are brutal. If you can't sit still with $40, you'll never survive with $40,000. This is psychological training disguised as investing. Now, understand this clearly. This $40 won't make you rich by itself. Anyone who tells you otherwise is lying. Its job is stability. It's the anchor that keeps you from blowing up your future chasing dopamine. Next comes the forward-looking exposure. The next $30 goes into tech and AI. Not because it's trendy, but because it's unavoidable. In 2026, artificial intelligence is not a sector. It's infrastructure. It's doing to white-collar work what automation did to factories. Ignoring it is not conservative. It's reckless. Here's the key. You're not buying whole shares. You're buying fractional ownership. That's how normal people participate now. Platforms allow you to own pieces of companies that are shaping the future without needing thousands up front. This could be companies building AI chips, cloud infrastructure, data pipelines, automation software, or platforms integrating AI into real-world use. You're not trying to pick the next moonshot. You're buying exposure to a trend that's reshaping how money is made. This $30 does two things. First, it gives you upside. Real upside. Not guaranteed, not smooth, but asymmetric. Second, it forces you to learn. When your money is involved, you pay attention. You start understanding earnings, news, product launches, and why markets react the way they do. This is how you transition from consumer to participant. And here's something important. Volatility here is not a bug. It's the lesson. You'll see prices move. You'll feel emotion, fear, excitement, doubt. That's the point. You're learning emotional regulation with small stakes, so you don't self-destruct later with big ones. Now we get to the most misunderstood part of this entire blueprint. And the most powerful, the final $30 goes into self-education, not generic motivation, not get-rich-quick nonsense, actual skill-building tools, a book, a course, software, a niche resource. Something that directly improves your ability to create, sell, analyze, automate, or distribute. Because in 2026, the highest return on investment isn't the stock market. It's you. Markets can go sideways, stocks can stagnate, but skills compound independently of market conditions. A skill can generate income, opportunities, leverage, and access, things no ETF can do on its own. Think about it this way. If you spend $30 on a book that teaches you a monetizable skill, writing, coding, marketing, data analysis, AI workflow automation, and that skill helps you earn even $10 extra per month, you've already beaten most investments. And that return doesn't stop after 1 year. It compounds for decades. This is where poor thinking collapses. Poor thinking sees education as an expense. Rich thinking sees it as an asset. The mistake most people make is separating learning from earning. They think education is something you do before real life. In reality, the people who win are constantly upgrading their skill stack because they understand one brutal truth. Income follows value, not effort. And value is created by skills applied in the real world. This $30 is not about certificates. Nobody cares about those. It's about practical capability. Can you solve a problem? Can you save time? Can you help businesses make money, cut costs, or move faster? If the answer is yes, you are valuable, regardless of your background. Now zoom out and look at the full picture. With $100, you've built 3 layers. You've got a defensive layer that protects you from doing something stupid. You've got an offensive layer that connects you to the future of money. and you've got a personal growth layer that increases your earning power. Most people put all $100 into consumption and wonder why nothing changes. This system changes you first, and that's why it works. Here's another hard truth. This blueprint won't impress anyone. There's nothing flashy here. No screenshots, no overnight success. But that's exactly why it works, because it's designed for people who want control, not clout. And once you understand this structure, you repeat it. Every extra $100 follows the same logic. Protect some, expose some, upgrade yourself. Over time, the amounts grow. Your confidence grows. Your understanding grows. You stop fearing money and start directing it. You stop reacting and start planning. This is how people quietly build momentum while everyone else is arguing online about coffee. The goal of your first $100 isn't to escape your job tomorrow. It's to change how you think forever. Once that switch flips, once you stop seeing money as something to spend and start seeing it as something to deploy, you're no longer playing the same game as everyone else. And that's the real investment. Not the ETF, not the tech stock, not even the skill. It's the mindset that turns every future dollar into a soldier instead of a souvenir. Here's the brutal reality for 2026. Most people sabotage themselves with the first $100 they get. And it's not obvious at first. It's disguised as status, convenience, or opportunity. Let's be clear. If you want to build wealth, there are 3 things you must avoid. First, fast fashion and hype clothes. You know the stuff, the sneakers, the limited edition drops, the brands everyone flexes on social media. Here's the math nobody talks about. You spend $200, it looks expensive for a week. And 2 years later, it's worth $20. 90% value gone instantly. You didn't just lose money. You traded it for temporary ego. That's a hobby for the broke, not a strategy for the rich. Second, new cars bought on debt. The interest trap is real, and it's more lethal than any stock market dip. A brand new car drops 20% the moment you drive it off the lot. Add interest payments, insurance, registration, and maintenance, and your $30,000 car easily costs $50,000 over a few years, while it's doing absolutely nothing to build your net worth. Yet people treat it like a reward for success. Spoiler, rich people don't finance toys, they finance growth. Third, get-rich-quick crypto schemes. Especially meme coins and coins with no real utility. Yes, you might see a chart that explodes 300% in a week. But ask yourself, what backs this coin? Who needs it? If the answer is nobody, it's a bet, not an investment. The sad truth, people lose tens of thousands chasing hype while missing opportunity to deploy real capital into skills, assets, and ventures that actually create wealth. Here's the principle that ties them all together. Avoid anything that decays, distracts, or depends on luck. Fast fashion decays in value. Cars distract you with maintenance and payments. Meme coins depend on luck and hype. All 3 make you feel like progress is happening, but it's an illusion. They give instant gratification and take long-term power. If you want to be a person who turns $100 into $10,000, you can't play the same games as everyone else. You have to be uncomfortable, patient, and sometimes boring. And the kicker, you don't need to avoid all fun forever. But until you understand leverage, until you understand compounding, until you understand skill deployment, every dollar spent on these traps is a dollar that won't fight for you in 2026. Avoid them, or keep wondering why the money never sticks. The choice is yours, but the math is unforgiving. 2026 is not going to reward the cautious. It's not going to reward the wait until I have enough crowd. This year belongs to the smart investor, the person who understands that small moves today create enormous leverage tomorrow. Here's the truth most people refuse to face. Billionaires give advice from the penthouse, not the starting line. They forget what it feels like to struggle, to save every dollar, to take a calculated risk with almost nothing. And if you blindly follow their old school cut expenses rules, you're guaranteed to stay stuck while the world moves forward. The difference between surviving and thriving in 2026 isn't luck. It's strategy and deployment. $100, correctly positioned, can teach you lessons generate returns, and start the compounding cycle that sets up everything else. You don't need $1,000, $10,000, or $100,000 to start. You just need the first $100, the willingness to act, and the discipline to follow a blueprint. This is your challenge for 2026. Stop waiting, stop hesitating, and start deploying your first $100 this month. Treat it like a soldier, not a souvenir. Put part in safe investments, part in the future of tech and AI, and part into yourself, your skills, knowledge, and capability. Every decision you make now compounds, not just financially, but mentally. You're training your mind to think like someone who scales wealth, not someone who survives it. So here's the action. Don't just watch this video and move on. Take the first step. Commit to the process. Decide today that you're no longer going to let $100 slip through your fingers for nothing. Comment start below if you are investing your first $100 this month, and subscribe for the weekly 2026 wealth updates. This isn't hype. This isn't motivation. This is strategy for people ready to act. 2026 is the year of the smart investor. Your $100 is your entry ticket. Claim it now.